Jacob,
And I'm Carlos.
and this is the coin flip.
What's
And
up, good people?
guys, I'm glad to have you guys here today. We got something important to discuss. It's very sudden to some people, to a lot of people actually, most people. But before we get into that episode, I want to please remind you guys to please comment, like, and subscribe, whatever platform you guys are listening on. It is greatly appreciated. And Carlos, let's get started, or let's get into what this episode actually is going to be about.
All right, so this episode is a mindset episode, everyone. So I think we have like 3 episode type Jacobs. We're gonna have informational type episodes. We're gonna have episodes where we like do have like a round table, and then we're gonna have some mindset episodes because that's pretty much what crypto is. So this is gonna be a mindset episode, everyone. As we know, if you're listening and if you're like caught up and listening while you're caught up, you know that we just had a pretty ugly weekend with Bitcoin. And that's just the nature of this industry. So that's what we're going to talk about. And this may be your first time experiencing it. So that's what we're going to talk about. And Jacob and I are not financial advisors. So anything we say or anything we're telling you is not financial advice. It's really just how we're judging things, and it's our judgment and it's how we think. So that's how you should take it. If you need a financial advisor, it's not us. You should go find one. All right. With that being said, we're going to catch you guys on the flip. So let me pull up this 7-day chart, this scary 7-day chart.
Honestly, me and Carlos were talking about this. We were having a long episode or a long talk about this
Yep.
whole whole crash before the episode even started. About like an hour long. We were just talking about this whole thing.
Right.
So we don't really we know what to make of it, but it is still relatively unordinary. So let's just go ahead and talk about this, Carlos.
All right. So first, I want to preface this by saying it's almost perfect, Jacob, how our episodes lined up. We talked about adoption. We talked about inflation. We talked about the history and like what can history teach us. And now we're kind of like in this present time. And it's almost like we're trying to predict the future, but we can't predict the future. And that's what we're like sitting here. It's almost like we're watching a movie, we're watching the game happen right now. So I remember telling you guys, as long as we stayed above 53,000, we would be okay. Well, we lost 53,000, and
too soon.
We lost 53,000 at about 4 a.m. Or like actually later in the day, 3 a.m. we bounced off of it a little bit, but then middle of the day, nighttime, we lost it, and as soon as we lost it, everything broke loose, and we had what you call a flash crash. And we went all the way down to 42,000, and I think the candle closed at 46,000. So we went from a weekly high of 58K to 42K. That is a 20% dip or correction, you can call it, or crash. Actually, that's not a dip or a correction. That's a crash. A 20% crash almost overnight. It felt like that is scary, especially to new investors. Especially
that gives any new investor chills. I mean, that's a huge drop. Like, let's be real. But this is something obviously me and Carlos aren't we're pretty used to, actually.
Yeah. Now, just to start, just to get this out in your heads, we do not think we're entering a bear market, and we don't think we're entering a bear market just because we think it'll be a lot worse, a lot bloodier if this was bear market. Yeah. Where we are right now currently, that leads me to where we are right now currently. We hit a high today about 51,800. So right now we're back in that support zone of where, remember I said 53,000? We're back in that support zone. 50 to 53,000 is the zone you want to watch. Right now we're at 50,428. You want to watch 50 to 53,000 because that is our resistance right now. And we need to flip resistance into support. And that is how we can continue on. So that's what we're watching right now. But we don't think we're bear market just because it would be a lot nastier if this was bear market. But I'll let you guys know. I didn't sell anything during this crash. Did you, Jacob?
I didn't either, Carlos. No, I didn't either, Carlos.
And we're gonna tell you what kept our heads on straight to not think to sell anything during this crash. So first, Jacob, let's discuss flash crashes and how they work.
Yeah, go. I mean, yeah, sure. Go ahead on that one. Uh, these violent pullbacks in crypto, as we both know, Carlos, they're pretty normal. Like
Right.
it's not surprisingly normal to new investors, honestly. Like
Oh
when you
yeah.
see something this crazy, this drastic, it's almost like what's going on? Like, are you like
Exactly. Exactly. It's like
this
sound the
is what I'm
alarm.
getting into?
Sound the
Yeah,
alarm.
really, for
Sound the
real.
alarm.
Ex- exactly. But these are kind of normal. These are pretty normal when it comes to Bitcoin.
Right.
And you know,
And
us
if you're
me being in the market for about 4 years, this is something I see all the time. So
right,
I'm not too worried about it.
if you're not into volatility, this is not the market for you.
Oh.
Um, but there are a certain things, like we said in the last episode, that are different about this cycle, and certain things that are similar. But the differences are pretty substantial right now, and we think those differences are affecting what we see in December. So I mentioned how it feels like we're playing a game almost, and I say we playing a game because Jacob in our the first episode, we told you quarter 4, expect big moves, right?
Mm-hmm.
Now, everyone is saying expect big moves in quarter 4. Now, I say it's a game because a lot of investing is psychological. A lot of investing is psychological. So everyone is watching Bitcoin in fourth quarter. Everyone. I mean, you got the media attention for it. It's on CNN. You have the SEC talking about things with Bitcoin. You have the Fed. They come out and say stuff about Bitcoin. Every country is talking about Bitcoin. So the type of attention we're getting right now is just like way more than what we got in the previous cycle. In the previous cycle, everything kind of went below everyone's nose. Like I wasn't even here for the previous cycle because it just happened without me even knowing about it, you know? Um Another thing I want to get at is past history does not always equal future success. So what happens in the past does not directly correlate or show you what's going to happen in the future. And
I mean, I agree. I mean, think about it. This whole cycle. If it was a direct correlation to history, we would be smooth sailing right now. We would be peaking and we would be cashing out, having a good time.
we would be in Miami
But
having a great time.
yeah, you know, I mean, but it's just not how it is. There's a lot of different factors in the specific cycle that's actually kind of deterring how this works, like these flash crashes, for example. And people are actually thinking that with this in mind, they are thinking about the lengthening of the cycle rather than just it stopping in the fourth quarter like how it usually did.
Right.
But like that in my opinion, Carlos, I'm pretty sure Carlos does share a different opinion than this. But this is why we had this podcast, two different brains, right?
Right.
Um, but my opinion, if it does go past a little bit more, like yeah, sure, no problem. If we're gonna see it, I hear people saying it'll go to even April. In my opinion, that's not happening. That's just what I see. I think if it ever goes past a certain threshold of a certain threshold, we're gonna see this bear market happen, and it's at a very unnatural pace. But I'm still holding. Like I said, this is an asset that I'll be holding because it's our future, not because I want immediate gains. You know what I
Right.
mean?
So I'll tell you guys a little bit my thought or my stance on lengthening cycles. So last week I literally said I'm not sold on lengthening cycles, but now after seeing how December has started, I think that we should start having the conversation about lengthening cycles. But my thought process with lengthening cycles is that the past cycles have lengthened, so this one could lengthen as well. There's no there in the big reason why I'm thinking this is because there have been no indicators that this was a top. I follow a lot of people on Twitter and things like that. There's been no indicators that this was a top, and of course we're looking at past indicators, so it doesn't necessarily mean that it's an indicator today in this present time. But right now, let me tell you this: neither Jacob or me are right now. We are watching this thing unfold. We're watching it unravel. We are playing someone else's game right now.
100%.
And
I
so
mean,
since you're playing someone else's game, this is perfect time to transition into our next topic. Since you're playing someone else's game, it's important that you have a plan. And I say it's important that you have a plan because when you see if you were in it when we started this podcast, I think since we started this podcast, Jacob, everything is kind of just taking off. There's been nothing but euphoria in this market. I mean, straight euphoria because you're making gains. There's nothing better than seeing your portfolio increase 10, 20, 30, 40, 50% when you wake up in the morning. When you wake up in the morning in 3 weeks, you're up 100%. There's nothing better than that. And that's is what happens. It's a little bit overwhelming. And you come in with a plan. You say, I want to end with X amount of dollars, but then you see how much money you've made, and you're like, oh, I think I could get more. I think I could get more. And that is what like you're trying to avoid because what happens during these flash crashes is those all get wiped away and you face some depression. And like I said, it's all psychological. So you have
right.
euphoria and you have depression that can affect your plan at times.
Yeah, I mean, just the like you said, the euphoria of the making gains and the depression of losing all your potential profit or even your initial investment. I mean, that's tough. Like, I mean, I've seen plenty of I mean, you've seen plenty of our friends go through that. Like
Yep.
they, oh, it is not okay. They're
Yep.
not in a good place. But that also just means like, yeah, I mean, if you are in that kind of a panic and if you are struggling like that, then did you really invest correctly?
Right, exactly. That's why it's important. Like if you see a number you like, take it, pull it. Don't get mad at
Right.
yourself.
I mean, like, did you like that's what I like to say. Like, if you're in a panic, then why? Like, did you invest too much? Is it gonna
Yep,
affect the way you live if you lose this kind of money?
yep. Or
These are the things you need to ask yourself.
are you not following your plan?
Right.
That's pretty important. And let me tell you this. This is the probably the best advice I think I could give to just like from on a mindset basis is time in the market is better than timing the market. So for someone that spends time in this market, just like utter, like putting in your hours, your days, your weeks, your months, they start to stack up. They'll probably be better off than someone that's trying to buy low and sell high, buy low and sell high. So it's just important. Honestly, if you're listening and if you're into this, it's just important that you're in my opinion. Just because what I tell people is, especially people that text me now, Jacob, they text me like they're like, "Hey, am I too late?" And I say yes, and I say no. I say yes because if you're thinking you're gonna make a lot of money in like these next 60 to 90 days, then you're in it for the wrong reasons. But if you're looking to watch in the next 4 or 5 years, then you're not too late. If you're like here for the next 10 years, you're not too late. You know what I'm saying?
I agree. I just think nowadays people see these immediate gains. People see these millionaires coming out of nowhere. They just want to get money quick. And what they don't realize is that, guys, doubling your money is awesome in a year is amazing. Like,
Yep.
do not underestimate that. I mean,
Yep.
the fact that people say like, "Oh man, yeah, but I want to 10x my money. I want to 20x my money." Guys, I think you're just getting a little greedy.
Yep.
It's
Well, they see it and
it's
you see it and you think, oh, this is possible. This is easy. I've done it once. I could do it again. Let me tell you, there is a reason why people will call this market or investing gambling, and that's because you don't know what's going to happen. So what's been happening with crypto is that news has been coming out. We had the COVID strain come out. I can't remember exactly what happened. Oh, you know what? We talked about inflation, and the U.S. The Fed came out and said they're going to stop their bond buying, which means they're going to stop basically increasing like money flow or increasing money coming in, and that will kind of taper inflation. But inflation is still going to go up. But what that did in the short term was that sent the U.S. dollar value straight up. So U.S. dollar value went up, and every other market went down. So not just crypto, stocks went down, crypto went down, equities went down. I think oil even
right.
had it went down.
Well,
So
to get back on topic, guys, if you are in a panic, then like I said, did you invest too much? Is it going to affect the way you live? Did you follow your plan?
Right.
These are things you need to ask yourself, because if you said yes to any of these questions, then you had poor planning and you need to reevaluate your portfolio
On it,
and just kind of,
a way to deal with panic, in my personal opinion, if you're one of those people that you have a plan, you didn't invest too much and you're still panicking just because just normal anxiety, I would recommend deleting your apps and walking away, or
yeah, yep.
doing something
Uh,
productive with your mind, like reading, going working out, do something to take your mind off of things, because I feel them, Jacob. Like I had a hard time during May, like watching it and everything. And I was like, you know what I'm gonna do? I'm gonna read about this stuff and educate myself to try to be better prepared for the future. And that's what I did. And I was enjoying life a little
deleting,
bit more. So,
yeah, I mean, deleting your apps is one thing. If you really just plan on investing it for the long run and you don't plan on taking your money out anytime soon, then yeah, why not? As long as you remember your password, guys, you got your seed. Don't worry, just let it sit, and
yep,
I'm sure you'll
yep,
get gains eventually, right? Um, well, this actually segues perfectly to our next topic here is strategies to fix your portfolio after getting substantial profit, or how to initially even start your portfolio in general. I know we already talked about this before, but we kind of just want to end this episode on a little bit of tips. But before I go out to use tips, we are not financial advisors. These are just personal tips that we use for ourselves
yep,
to invest this money, and we have seen success. But that does not mean you will.
yep,
Okay. Strategies to fix your portfolio after getting substantial profit. Well, first of all, taking out your initial investment and let your profit make money for you. Like if
yep,
you so then if you lose the profit, then so what? You didn't lose a dime and you gained all that experience.
yep. To
So
give you,
it's always really good just to, I mean, at least take your initial investment out uh after you gained a substantial amount of profit and just let your money work for you.
yep. Is to give you a little bit of a real world analogy. It's like going to the casino with $200. You just won $1,000 at the blackjack table. Take your $200 back and play with the rest.
Why not?
And then if you lose the rest, oh well. You have fun probably playing your blackjack. So, and if you walk away with more money, you did a good job. But take your $200 back, so you got $200 in your pocket. That's one thing you got. So,
And another thing is when you're investing, well, if invest bits at a time instead of investing what you have to spare all at once. I mean, $100 every week instead of $1,000 all at once. You know what I mean? It's just tiny things like that that kind of just get you, help your dollar, like your dollar average out a little bit, and it's just it's to help you find and actually like keep track of the market instead of just throwing your money all in there and then
yep,
just leaving it.
yep,
And the bottom line really is, if you can't lose the money, sell it. Like guys, I can't stress that enough. If you guys are stressing about the money so much, then please just sell it and invest it into something safer. There's plenty of options to do so. There's mutual funds you can go into. Plus knows all about those.
yep.
And like I said, crypto is not for the faint-hearted. That's for sure.
It is not, but it's new, so that's really why.
Right.
So, you got anything else for the people, Jacob?
I mean, guys, like I said, just comment, like, subscribe, whatever platform you're listening on. Follow us on all social medias. Sorry we didn't get to questions today. We really wanted to stress this episode on mindset,
Right.
but next episode is going to be pretty big Q&A, so look forward to that.
Right. And thank you for everyone for your support. Uh, let's keep building. We are at the Coin Flip Pod on Instagram. Follow us on Instagram. I post during these crashes. I post at all times. And with that being said, where are we gonna see these people, Jacob?
We're going to catch them on the flip.